The fight against Wall Street isn't taking place just in the streets of Lower Manhattan. There's discontent brewing inside the boardrooms of major corporations. Corporations with deep pockets who, just like the street protesters, are furious at the big banks. And instead of holding posters and chanting, they've gone to see a man who they hope will help them get their money back. Meet Jerry Silk, a big-time New York lawyer who has his bullseye on big banks.
The public wants to know how this happened and how so much investor shareholder wealth evaporated in such a short period of time.
Silk represents some big-name institutional investors, but he's really representing many thousands of Americans who lost billions in their pension and retirement funds. They bought what Wall Street was peddling, all those supposedly stable mortgage-backed securities that went belly up. Silk says there's not much difference in the feeling from his office high above Manhattan and the protesters down in the streets.
There's a root similarity, I think, in the fact that no one has been held accountable at this point. We have not seen any significant or meaningful actions by the SEC or the Justice Department against the main players in this area. Has created, I think, an enormous amount of concern and at the institutional investor level as well as at the protester level.
His firm has more than a dozen active lawsuits against virtually all the big banks. Silk says the litigation by plaintiffs' attorneys like himself has just begun, thanks to new details that are slowly emerging about bank behavior.
I mean, it wasn't until, very recently in the last 6 months to a year that you started seeing all of these facts emerge from these investigations, our investigation, Congress's investigation, where we actually got a window into what was happening inside the banks. We got to see the emails and see some of these documents. Before that, we didn't know the full extent of what happened.
Silk says it won't be an easy fight. Banks are fighting like wounded wolverines, saying that their disclosures were sufficient and that the housing collapse was unforeseeable. But the top 5 banks have put $12 billion in reserve for litigation just in case.
The banks have not taken responsibility. They continue to defend these cases very aggressively, and they've made the point to say we are not going to admit to anything. The government hasn't come after us, and we're going to fight these cases. And that there's something that's very kind of brazen about that, and I think what you're seeing is both on the level down in Wall Street at the protests as well as in the boardrooms of these clients saying we're not going to accept that, and we want our day in court, and we want the real facts aired in court, and hopefully that's where these cases go over the course of the next year to two.
If you've got it, watch it. If you don't, call your TV provider to get HDNet today.